Good morning, good afternoon to you all, and I hope this finds you well. My name is Greg, and welcome to our second Bristol Life Business Surgery. We're trying to help businesses and individuals in these unprecedented times with practical advice and valuable insights. We can all do with help because there's absolutely no monopoly on wisdom, and no one can be absolutely sure about what is going to be happening. We hope these Bristol Life Business Surgeries should help you guide you on your vital decisions in the coming months, whether personal or professional. Today's is about financial well-being. Other points, please look out for our Bristol Life's Our Doors Are Open campaign on social media, email newsletters and video promoting retailers and others, all of us, coming back to commercial life. And look out for our next Bristol Life Business Club on July the 13th. And there'll be another Bristol Life Business Surgery coming up shortly on technology strategy and planning for the new business world, which we'll be announcing later this week. Meanwhile, if you have time-sensitive news, such as your business opening up, please do talk to us about the Bristol Life weekly newsletter out this Friday and every Friday. There's one more thing. You may just have seen our announcement this morning about Bristol Life returning. We're really so pleased to be able to announce that. Our first issue will be published on September 18th. Like all business owners, we've been thinking carefully about our offer during this great pause, and about our teams and about our markets and clients. Here's our thinking. Media Clash is our business, and of course we want to be back in Bristol, in Bath, in Cardiff and Exeter. We are creative people, magazine publishers, event organisers. It's what we do, and we've not been able to do it as we have done previously. We are desperate to get back and to be amongst our businesses and clients and cities once more. But we also very much want to play our part to the full in helping promote and galvanise businesses in these cities. Our magazines and events celebrate the very best in these cities. Our editors work on this brief. Go find the good stuff and tell people about it. Now more than ever is the time to find the good stuff in our cities that's worth celebrating. To promote the independents which make these cities so attractive and distinctive. To recognise the major players who bring employment and so much more. And to encourage the living culture of our cities that have been silent during this great pause. None of us, whichever sector, can have a firm grasp on what will happen, how business will be. But all of us can play a part in helping breathe more commercial life and vitality here. And if we trade with, partner with, promote each other, then maybe, just maybe, this Q4 won't quite be the trouble fest that some fear. Thank you. And thank you for all of your support so far, and we hope in the future. Now, on to the matters in hand. This Bristol Life Business Surgery today with close brothers on personal financial planning as part of the way ahead in this new world. In this aftermath of lockdown, we will all be needing to make fresh decisions on personal financial planning. How are our priorities changing? How should we best review what we're doing and why we do it? And of course, what might 2021 look like? In some ways, that's the hardest of all. We'll be covering, amongst many other topics, practical insights, pension thoughts, asset disposal consideration, time horizons, perhaps property, different view of asset classes, personal estate planning, interest rates, opportunities, taxation changes, so much. This webinar subsequently will be available on our Bristol Life YouTube channel, and I know many will be accessing this subsequently, which is great, and please share if you think it's useful. I'll be interviewing two speakers today from Close Brothers Asset Management on your behalf, and we'll bring in questions during it if you have some. Please use the Q&A tab at the bottom, and they can be anonymous if you wish, or you can name yourself if so, whichever you wish. Our two speakers today. Let me introduce Ed Green. Ed, would you like to step forward, please? The wonders of technology without any frisson at all or any doubts. Ed Green, Financial Planning Director, will be joining us. Hello, Ed.
Hi there, how you doing?
Very well, thank you. I'll just give everyone a brief bio of you so that they know who will be speaking subsequently. Ed is a comprehensive lifestyle financial planning for individuals and business owners. responsible for developing Close Brothers asset management presence in the southwest, so not just Bristol, it's the whole region, and works with a select number of like-minded professional firms. And of course, like all colleagues and like so many in the sector, is aiming to deliver a high-quality financial planning experience. Nearly 17 years at Close Brothers, and sometime back graduated at Bristol Uni as well. Giles, good morning or good afternoon, if we could ask you to come forward. Giles is Ed's colleague at Close Brothers, senior financial planner. Likewise, a long period at Close Brothers, over 11 years. Good morning to you, Giles.
Hiya.
Good, you all right?
Yes, very well, thanks.
Good, and your patch is very much the south and southwest of England.
Yeah, similar to Ed. Yeah,
similar to Ed, and your clients range. We'll talk about some client types during this session, range from young professionals to those at or near retirement, and helping them reach their financial goals and objectives, and so on, which would be really interesting to explore. I want to impress upon everyone listening to this that I am asking this in spirit of curiosity. I am not seeking to elicit from our two illustrious speakers today any actual advice. So all of the information today is heavily caveated. None of what you will hear today either could or should be taken as investment advice. Caveat emptor, do your own research, and if better than that, perhaps talk to a financial advisor before making any decisions. And I'll also say stocks and such like can go down as well as up. No investment is without risk. And tax regimes can change, etc., etc. There you are, Ed and Giles. Is that distance enough for you?
Very good. Very good.
All right. Well, we'll come on to detail. And if I use the word advice, that's my language. It's not a professional form of advice. But I do want to come on to this the macro point that we're all pondering at the moment. Andy Haldane just yesterday, the governor of the Bank of England, reiterated that he believes. It's not just a belief, it's analysis. It will be a V-shaped recovery, which I guess we would all wish. What do you think of that, either personally or professionally? Is Britain set for a V-shaped recovery?
Personally, Greg, I think it's forecasting economic growth and recovery is always a minefield. So whether it's a V-shape, U-shape, W-shape, I think from a UK point of view, I think we were late going into lockdown, so we're coming out later than other areas, other countries. So we're perhaps lagging a bit, but I would hope we would catch up as we go through into easing. So I think we should go into it with optimism. Absolutely.
Yeah, and I think a good example of how quickly things can change is, the fact that shops are starting to open up. We've all seen the queues outside Primark or whatever. People are chomping at the bit to try and get back to normality again. So I'd hope as we gradually relax the lockdown that things can move back reasonably quickly, which will help the economy step up a gear.
While in truth, no one really knows, of course. You'd hope that, with respect to you, of course, as well, but you'd hope that the governor of the Bank of England would have a better grasp than probably anyone else. And would have the least reason to put his neck out there and suggest this V-shaped recovery, which when it was first talked about 2 months ago, felt deeply optimistic. That it disappeared and it seems to have come back. Fingers crossed for all of us, it'll be something V-ish, if not V-shaped. How about Bristol as a whole, or maybe the Southwest? How resilient do you think trading is in this city, in this area?
Well, from what I can see, Bristol has been, I'd say, booming over the last few years. Just looking out of the window of my office, which overlooks Castle Park and the river, and seeing the developments taking place in Bristol, the Findles Reach development, more office space coming up, more residential space, the skyline changing in Bristol quite dramatically. Plus the tech sector in Bristol is phenomenal. And I'd hope that actually during lockdown, these businesses have been able to continue. They're all very adept at being able to change their business models, work from home, use technology, etc. So I'd hope you're pretty resilient in Bristol. And I think when we come through this, we'll start to see things happening pretty quickly.
And I guess also with resilience, there's great ingenuity as well. There's a great entrepreneurial zeal, and many businesses, perhaps here's an illustration today with this virtual Bristol Life Business Surgery. Many businesses are having to pivot which is a bit of a vogue word. Giles, do you buy this idea that Bristol's in a reasonably robust position?
Yeah, I think we're a city which has a high proportion of service-led industry and tech, which has been able to continue work. Clearly there'll be sectors within Bristol that are suffering. Example of working from home and all those service sector employees working from home. The support in Bristol, the hospitality trade, those trades are suffering. But again, with the easing of lockdown and business models adapting to the change, hopefully we will get a recovery and we'll be resilient in Bristol.
Let's talk about your clients, not in anything which breaches confidentiality, of course, but as a sort of indicative idea of how they're thinking at the moment. How would you characterise their view of business and indeed thereby their personal value? Are they? I'm sure it's many and varied, but what about some of the key themes you're hearing from clients?
Well, from my perspective, when we first went into this back in end of March, there was such a feeling of nervousness. And actually, one of the first things we did was speak to our clients. It's having a conversation, finding out if everyone's okay, just chewing the fat as to what's going on and how it's going to impact them. And the conversations were more about health and well-being. Money didn't really come into it. It was more about, are you okay? Can you survive okay in this environment? Is your family okay? But we've seen that evolve. Certainly in the last month or so, people are starting to now look back at, right, we're coming out of this now, we can start making decisions. So things they might have put off from March are now starting to take shape. They're starting to see a bit more confidence appear in the market, a bit more stability, and more comfortable to make decisions, which they probably weren't. Well, just focusing on different things back in March rather than financial, but I think that's now changing.
Giles, do you think that on balance, there's perhaps more hope than fear now than previously?
Yeah, absolutely. Talking to clients early on in lockdown, as Ed said, it was more keeping them informed, updated, and the more clients are informed, the better decision making they can make. And clients, I think clients that we work with, we've ensured that they are resilient and able to change and adapt and change their plans, which has helped over the last 3 months. For example, not disinvesting from markets at the wrong time. And therefore, looking forward now, I think plans can start to change. You just need to reassess targets and planning, and just make sure again that you're ready for anything that's going to come in the future.
And clearly your clients are there in a personal capacity, working out their personal finances, and we'll come on to some of that shortly. But most of them, I would imagine, are business owners, or at least senior people within businesses. So I just want to keep to that business point. In broad terms, you've mentioned about the tech sector, of course. Which of the other sectors appear to be in better shape? And I'm looking for the positives here, so I'm not going to ask the corollary of that on the negative.
Another client I spoke to fairly recently runs an engineering business, and he was saying actually they've gone into this in very robust shape. Their cash flow was looking very good. Their order book was looking very good. They haven't had to furlough any staff through what's going on, which is good. But he is looking at a bit of a lull. The fact that they haven't been able to take on new orders in this time, things have quietened down a bit, but he suspects it will pick up quite quickly. So because they were in quite a robust position, he's looking at the future pretty confidently, but he does expect there to be a bit of a lull before it picks up. So that's one aspect, and other clients in as we said, the tech sector. I think there's great opportunities in that. So they're pretty happy in inverted commas as to how things are, but still people are treading forward cautiously.
We'll come on to that crossover between the personal and the professionals, because clearly, as mentioned, these are business owners and they will have different views of assets, either disposal or acquisition. But I wondered, on the personal side, this is perhaps has been a time to plan, or at least a time to reflect. Our clients at the moment, this is a general point still, taking active decisions on their personal finances, or are many just simply sitting on their hands on the basis they just want to see how this new world develops?
I think with advice, the clients have still been able to make active decisions, and some of those decisions have been, under advice and recommendation to sit on your hands and hold. But again, the world keeps on turning and we keep on moving forward. So certain things have to happen, and we've been able to help clients with that. So I think it's been a mix.
I thought you were about to break into a massive attack song there when you talk about the wheels keep turning. Let's talk about from your point of view as individuals, professional individuals. Have you personally found this harder times to offer advice? Because on the one hand, there's greater uncertainty for all of us, but particularly for your clients. And on the other, there must be greater almost desperation occasionally for some who do not know what to do and need to get out from under. How has that been for you personally, giving out advice in these times?
Well, I think one of the key messages we gave early on was, it's business as usual as far as we're concerned. And that gives people confidence that we're still there. We're still, our investment teams are still working, our financial planning teams, everything is, working as well as it can do in these times. We've learned a lot from this environment as well as to how we can contact clients and communicate. And strangely enough, our ability to communicate, I feel, has stepped up. Being able to communicate, via this medium with clients and over the phone more, and the fact we've got more time on our hands without traveling, has made it actually a little bit easier. So some of the conversations we've been having with clients have been very positive. And yeah, as Giles was saying, life goes on, the wheels keep on turning. It's not, you don't want to lose this 3 months, 6 months, whatever it's going to be. It's actually giving people time to reflect and think about what's more important to them.
Yeah, don't let a good disaster go to waste. Use the time to plan, as I'm sure is part of your message, if not personal, as I said.
And the people could be making some pretty significant decisions off the back of this ordeal. Changing tack a little bit, working out actually what's important to them. They may have been, having very busy lives, running very good companies, but spending a lot of time on that and not having so much family time. And actually now there might be more of a balance between the two, and people will start to rethink what's important to them. Yeah. And that could change their financial plan. So it may be a bit of tweaking involved.
So for those who don't know, and there will be people on this call, I suspect, who may not, talk us through in outline terms how you earn your fees. There may be some cynicism out there that you will be promoting one product or service or whatever because you're getting some sort of benefit from it. Let's talk about that and the regulatory environment in which you work. Okay,
well, the best way of explaining what we do is dividing our job into 3 elements. And this is broadly how our initial discussions will go with clients, and also our ongoing discussions. The first element we deal with is understanding what their lifestyle requirement is. What are they looking to achieve with their life? What's important to them? Family, holidays, property, school fees, peace of mind, estate planning, legacy. What's really important to them? What's their driver? What do they worry about at night, and what do they look forward to doing? And that's a really important conversation. Once we've got a pretty good handle of what they're looking to achieve with the rest of their life, what they want to achieve and what their concerns are, we can then start putting a financial framework around it. And that's financial planning. So this is putting a pound sign against these different objectives. So whether it is funding a second property, paying off their mortgage, retirement planning, so when do they want to retire, what does that look like for them? It's understanding what they need in order to achieve those goals, how much income, how much capital, and what their current position is as a starting point to work out what their shortfall is and what they need to do to achieve those goals. It's only once we've done those first 2 roles till we can start to look at what we classify as advice. And advice is actually, right, okay, we've got a financial plan here. What structures, investment strategies, tax wrappers, etc., do we need to put in place to meet those goals? How much money should you allocate to each element? How much tax should we, well, not avoid, evade, but how much tax is there that we can try and reduce to make things more efficient and make sure things are pointing in the right direction? To do their housekeeping, to look at what if scenarios if things go wrong. You know, have they done their will? Have they done a lasting power of attorney? You know, if things go badly wrong. And those are the kind of basics, but then we start to add to it from there. As far as how we charge for what we do, the process we go through with new clients is we have a no obligation meeting at our cost. So we would have an hour, hour and a half, whatever it might be, and just have a discussion. It's seeing the whites of each other's eyes, walking through what they're looking for, what we can offer. And once we have a pretty good idea of what we can offer them, how we can add value to them, and understand what we do, we'd come up with some kind of a fixed fee or something like that to carry out a piece of work, a planning project or whatever it might be, to do this life planning and financial planning stages. And that might be looking at their income and expenditure, what cash they've got, what investments they have, what pensions they have, what is their working environment, etc., to build a plan to then meet their objectives. And once we have a good understanding of that, then we can put in place the final bit, the advice bit, and there may be transactional fees for putting in place various elements of that, and that will vary depending on the complexity.
But that very last point, transactional fees, i.e. implementation fees, I guess, is what people may think of them as, but they aren't related to a percentage of the spend on a product or service, because it is not permitted under regulatory approaches.
No, we have a tiered fee for putting in place various strategies, and that's irrelevant of, you know, which products we use or which companies we use or whatever. So that's our fees for putting in place that particular investment strategy or whatever it might be. And we also charge an ongoing fee for looking after our clients, which is generally a percentage of the assets we oversee.
Yeah. I want just to highlight that point, and for any lawyers listening, they'll get the exact difference between being disinterested and uninterested. So you are disinterested in the product in the sense that you do not have a carrying interest, but you're not uninterested. You really want to give that advice that works well for your clients at their different life stages. I want to come on to your service here, as individuals under the brand umbrella of Close Brothers Asset Management. It seems to me that many clients in all forms of professional services will simply expect a level of technical understanding. They'll understand, particularly in your world, that you are accredited, you're operating within a tightly regulated environment. But ultimately, as well as the brand and the track record, what they're buying is trust. And I wonder how you approach engendering trust in your clients such that their portfolio is essentially sort of safe in your hands.
Well, yeah, sorry, Giles, you carry on.
I think it boils down to the initial work we do with clients in ensuring there is a reason why they've got a financial plan and a reason to carry on and review that plan, and the engine that sits below it, the investment, to ensure that things remain on track. And it's being there for that client whenever they need us. You know, there is a schedule of review, and that gains trust, but also being there during the good times and the bad times. You know, like Ed said earlier on about early stages of lockdown, it was contacting clients to ensure they are comfortable, to ensure they understand what we're doing as a business, and also what's going on in their plan, in their investments, in their assets. And that creates trust and maintains.
As ever, the phrase "advisors advise, but principals decide." You are there to propose approaches, tactics, and help shape strategy. Do you find that occasionally just a little bit disappointing that you think that X is exactly the right route for someone to go, and they believe that no, it's Y instead. How do you finesse that so that your clients come to the conclusion that you start with?
Well, we act as we are a sounding board, and I think that's part of the reason why we enjoy doing this job. Everyone's different. You know, we can have 10 clients all in exactly the same financial situation with the same objectives, but we come out with 10 different financial plans because their view of the world is a little bit different. Our job is to make sure they can still meet their objectives. That's important. We will push back if we think that a client is going down the wrong path. And, you know, we can have some quite animated discussions with clients because we want to make sure that their plans work out. We've all had pretty good experience in, you know, dealing with certain situations, different market cycles, and client cycles, you know, whether they go through getting married, having children, retiring, you know, a relative dying or whatever it might be. We've been there, we've been involved in that, you know, from a financial perspective and also an emotional perspective. So we can help people get through these situations. And we're often the very first person, or certainly the top couple, who get called when clients come up against some pretty tough situations, divorce, death, whatever it might be. They speak to us. You know, we are focusing on them as a person, and that their wealth is second to that.
You're there in those distress times of divorce and death and pandemics and uncertainties and so on. But I guess you're also there in the good times when there's maybe asset disposals or inheritance or whatever else, however people get personal liquidity or whatever. I want to come on to this point about life stage that you briefly touched on and your approach to strategy. Just give you sort of three broad groups. If people are approaching you, I don't know, late 20s, early 30s, they're thinking settling down, maybe just married, thinking babies, etc., etc. What would be your approach to helping them shape a financial strategy that works for them?
It's first of all setting those time horizons with them, and breaking that down into short, medium, and long term. And at the age of 20, you know, can you think long term? Probably not. You're focusing on the short term. So it's understanding what those priorities are, and helping them focus on those. They're very different at the age of 20, you know, focusing on perhaps buying property, so therefore taking on mortgage debt, and needing to save for deposits. So we'd consider things like ISAs with those individuals, lifetime ISAs, to help them get onto that property ladder at the appropriate time. But it all starts with really budgeting for that sort of client. Well, every client needs a budget, needs to know their budgets, needs to know their income and their expenditure. And first and foremost, be able to deal with any financial shocks or upset that's going to come in the short term as well.
How many of your clients or your new clients perhaps typically have personal budgets and actually either understand them in detail or adhere to them regularly? Is that a thing?
Yeah, well, what we try to do with clients is get them to focus on, you know, be it either leading to retirement, in retirement, or saving for a specific goal, is to do quite an in-depth income and expenditure analysis, because that can highlight, you know, what is disposable, what is the spending currently, how will that change in the future, particularly retirement planning. You know, what sort of income or what sort of expenditure you're going to have in retirement. That's quite difficult to just put a number on without understanding where you are now.
Let's come to a prior stage. What about a different life stage, mid-40s, 50s, kids soon to leave home, uni, whatever it might be, and so on? Again, how do you approach the time horizons for couples or individuals in that sort of age bracket?
Well, there might be more of a sense of urgency. I think, as Giles rightly said, someone in their 20s or maybe even early 30s may not necessarily have a good idea of the direction they're going in. But I think by the time they reach their 40s and 50s, then they're starting to be a bit more conscious about time and making the most of their time. Obviously, if children are leaving home or going through university, then there might be some budgeting issues there. Can they afford to support them, and for how long? And hopefully they would have built a robust plan already to do that. But then they're looking at their own, when they, we call it financial independence, when they have the ability to, down tools and actually do everything they want to do without having to earn money. And that's an important conversation. Hopefully it's been had before they've got to their 50s, but it's making sure all their ducks are in line to be able to achieve the goals they have, and start to think about, sadly, legacy planning. What's important to them, how can they, if anything were to happen to them, it's making sure they cater for the people they leave behind. So, spouse, children, whatever, making sure everything is robust and protected should anything happen to them.
And a later stage still into the 60s, perhaps 70s and so on, that sense of mortality is ever encroaching, and particularly in current times. Are you having new clients coming to you in that sort of age category? Yeah,
I'd say probably a large proportion of our, well, in fact, it is a large proportion of our clients are in that category. So I'd say our majority of clients are 50s upwards. They're people who have, built their businesses, done well in their profession, they've built up assets, and they're looking to carry on building to some extent, but actually looking to deploy them, to work out what they can get out of them. Is this, portfolio of different assets and cash and everything else going to help me achieve my goals? And if they haven't done a plan to date, then it is coordinating that sooner rather than later. And certainly in retirement, it's income strategies. It's working out how can I generate this income I need for the long term, and not have to worry about it, to focus on my grandchildren, to focus on, getting away and doing a bit of traveling while I can. And so it's trying to take away those stresses and strains so they can enjoy life.
Yeah. Just like,
go on.
Sorry, just like clients have done in their businesses, in terms of cash flow planning as a business, it's important to look at that in your personal finances as you approach, or you're going into that sort of retirement planning stage. It may not be full retirement. More and more people are carrying on working or running businesses in retirement, just maybe spending some more time, more leisure time, more time out. So again, talking about what Ed just touched on, bringing all their assets together into some sort of cash flow to see how things map out during their lifetime can help them visualize, okay, well, how am I going to achieve my financial independence, be it, working to some degree throughout my retirement, or giving up altogether.
And just one thing on the legacy planning, as you touched on, Ed, where does Close Brothers stop, as it were, when it comes to, I don't know, wills, lasting powers of attorney and so on? Those are presumably legal processes which you would feed into in some way, you would advise in some way, or what?
Yeah, but what we do does overlap with solicitors and accountants. So if we agree with a client, they need to update their will or arrange a lasting power of attorney or set up a trust or whatever it might be, then we'd work with firms of lawyers who we know and trust to work with us and arrange that for the client. Likewise on the tax side with accountants, making sure that everything is tied up neatly. So we might coordinate it, but then we'd liaise with third parties to get those resolved.
Let's come on to a specific area. You mentioned briefly at one point about tax relief. For those on this call who don't really understand quite what that is, they've got some rough idea that it sounds good. Talk us through the different types of tax relief that there might be out there, and also the time horizons about when they need to be investigated, enacted, and so on.
I think, when you think of tax relief, you might immediately think of pensions, particularly as business owners, contributions into pensions yearly, maybe coming towards the end of the tax year, but you need to start thinking about, okay, how much, where can I fund that pension contribution from? What are the tax advantages for me as an individual? or also for me as a business in making a contribution. So either as an employer or an employee. So all that sort of work needs to be considered, particularly pensions, probably autumn time, particularly if you're going to do lump sum pension contributions. And I would say in what we've gone through in terms of the current environment and maybe a bit of a slowdown in revenues coming into business, business owners should perhaps review their existing contributions if they're already making them, just to make sure they don't exceed allowances on pensions by the end of the tax year, just because revenues have dipped and profits are a bit lower.
Could you just be a bit more specific on that, please? Those allowances, give us some sort of framework and guidelines. How might businesses exceed those limitations?
So you can contribute into a pension each year up to what's called the annual allowance, which is £40,000 per year, or 100% of your earnings, whichever is the lower, effectively. So you just need to be mindful of that if you're putting in big contributions as a business owner or an employee, and income's dropped because maybe you've been on furlough for a length of time but still making those contributions, then you just need to be reviewing and assessing before the end of the tax year just to make sure you don't exceed those allowances.
And just on that furlough point, if your income, which it will for many people, of course, and uncounted millions, your income will have dropped during this period. Is it defined as dropped because you're not being paid by your company, or is it neutral because it's the furlough amount, so that doesn't touch the pension point?
And my understanding is it would be, your total earnings would include your furlough pay, effectively.
Right. Okay. Tell us also about your sense, and I know this can't be a prediction, and it certainly isn't advice. But your sense of tax relief, is the jurisdiction likely to be tighter going forwards from government, or looser, or broadly the same? In other words, is there a greater need to take action now before the net closes?
Yeah, well, I think it's not difficult to predict that the government's going to have to replenish their reserves probably over a pretty decent period of time. Boris Johnson has said he hates the word austerity, doesn't like using it, but they do want to kickstart the economy, absolutely, but they're going to have to repay the money somehow over a period of time. So the tax reliefs, things like ISAs, pension allowances, even inheritance tax allowances, there will be scrutiny on those things. So it might be a case if these allowances, while they're around, if you can, it's generally worth taking advantage. If you can get some of that tax you've paid back, then it's a good opportunity to do that before things might start being tightened. We obviously don't know what the future holds, but I suspect there will be a little bit of tightening on that. But obviously it's making sure you've still got, going back to the financial planning point, piling all your money into using up your tax reliefs is all well and good, but there can be limitations on accessing that money in due course. Just trying to get the balance right between these things. Yes,
it's keeping the appropriate liquidity, I guess. And one key area for people, individuals, is mortgages. And on the one hand, there's an argument for mortgage redemption, given that interest rates will, at some stage, increase. On the other, the argument's almost the other way, that mortgage rates have been at their lowest interest rates have been at their lowest for many years, and that will at least continue for some time. Is now the time either to redeem or to lock in fixed rates, as a general piece of advice? Not the word advice, general observation.
It depends on your circumstances. I give you an example of a young family with young children, perhaps both earning or one earning. Then a fixed rate mortgage might be more appropriate for that sort of family structure, particularly in the case of budgeting. And therefore, it could be an ideal time to say, okay, well, children are 5 years old. Maybe we fix for a longer term now because rates are low, and that gives us stability, but also gives us the potential of locking in at a low rate. So it is a good time to to consider those things, but you have to also consider the wider circumstances.
And clearly interest rates, it's back to the Andy Haldane territory, I guess. Interest rates are amongst one of the most obvious ways of controlling the macroeconomy. Is your view, and it can only be a view, of course, it can't be a prediction, is your view that interest rates are likely to increase in 2021? Or do you think we're at this level for at least the foreseeable?
I think it's a knife edge for the government. A lot of people are reasonably indebted. There's a lot of mortgage borrowing. People have got loans. If they increase interest rates too soon, then whatever recovery phase we're going through in 2021 could be knocked off.
Yeah, could be throttled.
So I suspect it will take some time before interest rates start to increase significantly. Who knows what happens in what will happen in 2021, but I suspect it will be a very, very cautious approach from the Bank of England on that.
I guess we'll have a slightly better steer come the Chancellor's autumn statement about at least how government is thinking, and as well as implementation of its own strategy. But for now, slightly broader than mortgage. Again, do you think this is a good time to be paying down debts and having a cleaner financial slate? Or conversely, is it time to pile in because there's assets out there that can be funded through debt?
I think there's an opportunity for both. Personally, I quite like using it as an opportunity to pay down debt because interest rates will inevitably start to go up at some point. But if it is an opportunity for perhaps business owners to speculate a little bit, to take advantage of perhaps slightly depressed asset prices, property prices, whatever it might be, to do that. But it's treading carefully. The economy is in a fragile state. Asset prices are reduced for a reason. So it's going in with your eyes fully open and making sure you've got enough capacity outside of that to withstand further shocks.
It's borrowing for the right reasons, really, at the end of the day, and not borrowing for borrowing's sake, because ultimately we know it's got to be repaid. So again, as a business, you've got the support that's on offer, but borrowing it, if you need it, is good. But ultimately, some will need to be repaid, so you need to cash flow that into your planning, right?
And presumably, with asset prices being depressed because of uncertainty, it may well be that acquisitions are much more contingent on earn-outs and so on, because that is the way of moderating risk. I don't know if you're experiencing that already with clients.
Not so much. I mean, it's not our kind of area of expertise, as it were. But I think it is treading carefully. The environment is difficult. Going back to just being cautious.
This great pause that we've all been experiencing one way or another, do you think it's prompted, as well as perhaps sense of mortality with individuals and maybe companies, but do you think it's also prompted a greater interest in ethical investing? That the sense of the broadly green agenda, but not just that, actually is more pertinent now for many people than it would have been 3-6 months ago?
I think from individual investor perspective, there is more interest in it. From an asset management perspective, within Close Brothers, we run ethical or socially responsible portfolios, but we also use the same sort of process when we're assessing companies and their assets to include in other portfolios. So the whole what they call it ESG, the environmental, social, and governance measures that you can look at a company's measure are being used widely across both Close Brothers and other asset management firms. So I think it's just increasing the awareness in private investors all the time.
Yeah, and I think that the conversations we have with clients, yes, growing their portfolios, achieving their objectives are all important, but impact is also, starting to build up in importance alongside that. How is my money being deployed? What are these companies doing? Are they creating a better world than we have had in the past? So that's becoming an important conversation. And in fact, it's good you've mentioned it, Greg. this is something that's becoming a regulatory change later on this year, but it's actually be part of our conversations with all clients as to how their money gets invested, what are their ethical concerns, and should their money be deployed, taking that into account, rather than just a side conversation.
With perhaps not the chapter and verse, but you mentioned the regulatory change or some such. It's going to be sort of baked into that subsequent times. In headline terms, what would that mean? What would you as advisors have to be doing differently in the future than you're doing now with that new regulation?
Well, we're making sure that discussion is recorded. There will be a discussion with every client, and then it's talking about what their ethical concerns are and whether they'd like that to be incorporated into their portfolio. So it's just like record keeping, the fact there's been a conversation, and that will happen in every single client, investment conversation.
So whereas previously it's almost like the organ donation approach, if I may make a slightly inappropriate comparison, where previously you had to opt in for that. This time, i.e. clients would have to say, have you got some ethical routes and so on, or socially appropriate routes. From now onwards, or September, whenever it is, you will be proposing. And of course, it's still up to them to say, well, no, I don't want that, I want the maximum return or whatever. But you as advisors will be doing that every single time going forwards. Is that where we're up?
And I think that's one of the interesting points that, by going down the ethical route or ESG route, does that mean that you won't necessarily get the same returns as you would from a standard portfolio? And actually, it's been proven that that's not necessarily the case. And certainly in recent times, it can be the other way around. So there's definitely movement in this direction, and it can make sense from an investment point of view as well. So I think it's definitely an important conversation.
Yeah, I mean, thinking about lockdown and resilience of businesses, sustainable businesses focused on their environmental impact, historically have resilience through different markets, through different market periods. And therefore, like Ed said, the performance of these types of portfolios has increased. The breadth and the universe, if you like, of companies to invest in is broadened a lot. So more diversification can be achieved. So I think it's just a growing area, and clearly one that the regulator wants to ensure that is covered in any advice.
Yeah. And I'll ask a sort of willfully simplistic question, probably not for the first time today, but in very rough terms, how much of your clients' assets are currently in socially responsible areas? Is it even significant at this point? Clearly it will grow, one hopes, but where are you up to at the moment, roughly speaking?
Well, I think we as Giles said earlier, we have an underpin with all client portfolios of ESG. So all of our portfolios, we're looking at environmental, social governance anyway. So that's an important factor. But then it's kind of shades of green, really. If a client has ethical concerns, then they might go into a 100% ethical portfolio. I'd say, well, I don't have the figures to hand, but it's probably less than 10% which have 100% ethical portfolios at the moment.
No. It is interesting that that government is driving that change and forcing. I'm sure you're saying you're bringing it up in any case, and have been for some time, of course, as responsible corporate citizens. But if it's prompting all advisors to bring this to the table for people to consider, it must effect change on a sort of more macro basis going forwards. So presumably this is going to become a larger part of your business advisory area or personal advisory area.
Yeah, it is, and the same applies to companies as well. If they're setting up some form of pension scheme for their staff, then they just need to make sure there's options in there for staff to put their money into more ethical funds. So it's going to affect everyone in some shape or form, whether they're advised or not.
Talking of pension pots and such like, I saw an interview with Richard Curtis, the playwright, director, screenwriter, and so on last night. And he said, and again, caveat on this, may not be wholly accurate, I haven't done my research, that the UK pension pot is of the order of 3.1 trillion, apparently. And he was promulgating the idea that as a major asset could be used both on a macro and on a micro basis to affect change in current times. Is that pie in the sky?
No, not at all. No, I do think, I mean, you know, this money is deployed globally. So it's not as if it's all invested, you know, in UK assets, but certainly a good proportion of it is. And actually, if there are opportunities for good infrastructure investments, for pension funds to get involved in, which will help the economy, and there's good financial sense in doing that, then yeah, absolutely. It's an asset, you know, which shouldn't be ignored. It's significant.
We're coming towards the end of this session. There's 10 minutes or so to go. I wonder if there's some other areas of financial top tips that we haven't covered that you'd wish to stress to clients, potential clients, and so on who are watching this.
I think, you know, it's getting the basics in place. We quite often have people approaching us looking for the new big thing. You know, what are the new big opportunities? How can I make money very quickly? And actually, we steer the conversation back towards get your housekeeping done, get your basics in place, make sure that you're not paying out money that you shouldn't be, that you're not overpaying for your utilities, you know, real basic things like that. Having your budget sorted out. One of the first steps we take with clients, aside from budgeting, is just looking at what is their current asset base. And if you ask anyone, they rarely know exactly what they're worth. They've got lots of different things all over the place. They've got, you know, property, investments, cash deposits, whatever. It might take them a long time just to pull all that information together. When we get all of that and put it onto one piece of paper and say, that's your starting position, it's generally quite a shock to them. And actually, it's such a good exercise to do. Find your starting point.
Is it usually a positive shock? They've got more than they realise, or a negative shock?
Generally, it's positive, strangely enough. You know, I've had people almost falling off their chairs when they realise, you know, it's like a only fools and horses moment, that they, you know, they hadn't realised they were millionaires in you know, paper terms. So it can be, you know, a good conversation to have. It's a good starting point. Doing an exercise like that can be invaluable, whether it's under advice or off your own back. Just building your spreadsheet, looking at it, and starting to work out what can be made more efficient in this.
I think sometimes shock could be the wrong word, but doing that for a client, sometimes it just opens their eyes, and they can then move forward with their eyes wide open into, you know, what their expectations are, or change those expectations. But it's a good ground to start from. Really.
Well, certainly the question, how do I get rich quick? There's a fairly easy answer to that. there are no easy ways, probably ever, but certainly not now. Can I just talk about back to you sort of personally again in these times? You mentioned on a practical point, which is you're able to talk on Zoom and have you know, direct conversations with clients, arguably more than you might have done previously, where it was face-to-face and so on. How has your work changed, and how has the nature of your advice changed during this great pause?
Well, clients were, from the very beginning, have been growingly receptive to dealing with certainly myself, my colleagues, on things like this, Zoom, or just telephone calls, because I think we all went into it together. You know, we all went into lockdown. We had no choice. Nobody had any choice. They communicate with their families in this way. So that's been a great help, really, because we all went into it together. I think it will ultimately change some of the things we do in the future with clients. So it will hopefully increase client contact throughout the year. You know, we're always available to clients throughout the year, but we'll have maybe 6 monthly, quarterly, or half yearly reviews, annual reviews, and that will increase off the back of this. So it's going to be a change moving forward for the positive, and a different way to do business, really.
And Ed, thoughts in this direction from you?
Yeah, I think, you know, we have a lovely office in central Bristol, you know, 45 staff or whatever in there. It's a nice environment to work in. There's good conversations, good banter. nice client meeting rooms and all of that kind of stuff, good coffee machine. But actually, from my point of view, going through this, do we need all of that? I think we do need social interaction. We do need to speak to each other, and it is quite nice being able to see people at the same time. But actually, it's made us think, well, we don't need it all the time. We can work more flexibly than before. And I think clients have appreciated that as well. You know, yes, they do want to see us face to face. You do lose something by just speaking to someone over the phone. But actually, you can do 90% of what you could do before over the phone and by post or by email or whatever. So I think we can adapt. We can, you know, practicing what we preach about efficiency. We can make our service more efficient and give clients more time, which is actually what they want.
Yeah, and in a sense, this pandemic, this lockdown, pause, whatever, has stripped back some of that sort of brand expectation or the, you know, inviting to some extraordinary client meeting room or some such. It comes back down to humanity, and do your clients trust your advice? And that's what your service offering is. It's years of experience within a regulatory environment and offering trust based on track record. And much of the rest is sort of slightly secondary to that. That's what people want, is that humanity. And that's what you've both been displaying this morning. I'll just come back to one last observational question to you. Whilst in broad terms, it's never too early to start thinking about personal financial planning, what is a sensible, realistic timescale?
You go back to the example you gave of a 20-year-old, you know, where do they start? You know, clearly things are a bit more short-term there. I think I would suggest as you approach more settled environment, you know, maybe house purchase. We always think house purchase is settling down, but more and more people aren't buying houses, they're renting. So it's getting to a settled financial position where you know what your career looks like to some degree. So maybe as you approach your late 20s, early 30s, that's an ideal time to start thinking about it to some degree. And the key thing is not to stop thinking about it, because your life and the world doesn't stand still. Your life won't stand still. Things will change all the way through. Even when you get to retirement, even our retired clients, their lives are constantly changing.
And one gating item, Ed, of course, is the tax year. You've got to get your tax returns in good place, which means getting on with it in the autumn, presumably ahead of the March deadline. Yeah,
I mean, you know, getting it done now. I mean, whilst people have got more time on their hands, it's a good opportunity to focus on this kind of housekeeping stuff. Get it done, you know. The budgeting side, you know, focus on doing these basics, get the housekeeping done. So as things improve and we come out of lockdown, then you'll be in a far better position to take advantage of that.
Great. Well, our thanks to Close Brothers, and specifically, of course, to Ed and Giles for this personal financial planning, personal well-being in many ways, as part of the way ahead in this new world. Thank you for your time and questions today. Do look out for our next Bristol Life business surgeries and clubs. If there are businesses, particularly professional services, who have the type of offering, not literally this, but the type of offering which will be of value to businesses and individuals, please talk to us. It's an opportunity to explore areas, and I hope this has been useful for those watching here. And when I say look out for our business surgeries and business clubs, please also look out for something called Bristol Life, because it is coming back and we are absolutely thrilled with that. These have been testing times. They will continue to be testing times for us all, but it is possible with planning, as been talked about today, with hope, as also been talked about, and with some sense of the macro maybe heading towards more of a V than an other alphabet-shaped recovery. There is some sense that these times shall pass and better days are out there for us all. Good luck, good wisdom for all. This has been a Media Clash production, and this has been the second Bristol Life Business Surgery. Thank you. Bristol together.
Thanks, Greg.
Thanks, Greg.
Cheers.